Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight, the Australian dollar retreats sharply as the US dollar index, the USDXY, which tracks the greenback strength against a basket of 6 major currencies, surges to an intraday high of 92.81 following the release of the June US Consumer Price Index, which jumped 5.4% year over year, the largest gain since August 2008, which was above expectations of 5% increase. Now, the Labour Department, that is, also said that the CPI rose by 0.9 month over month after advancing 0.6 in May. Therefore, eyes turn now to the US Federal Reserve Chairman Jerome Powell, as he's back in the spotlight this week as he testifies before Congress on Capitol Hill. That is, for 2 days, Wednesday and Thursday. So no doubt the market will be a little bit whipsawed. And from the current price action and the retreat, there's one thing that really stands out, or one thing I believe to take away from this pattern is there's bullish divergence. So I still feel that 74.20 will hold in the short term and therefore could see a retest to that top side resistance around 74.95. If we do see a close under the level around 74.20-40 area, that would reinstate the downside to around 73.65.70. The low today has been 35, so do keep an eye on that. But as I say, there is divergence here. If I just like to draw that in, as you can see, the market here as the price declines. So therefore, there is that divergence. So keep an eye on that. And also a little bit of divergence there as well within the MACD. So with the dollar index, which is weighted to the euro at 57.6, has near enough reached its target of 117.50.80, with the low being 71 today. However, a little bit of divergence here also, as you can see. You can clearly draw that in with the two lows and with the rising indicator here. So a little bit of caution, just in case we do see a rejection. Now, as I mentioned, it was my objective around that level of 117.50.80. So I would probably start thinking about taking a little bit of profit if you're trading this market to the short side, just in case we do get a rebound. Or the other way is to lower your stop losses according to your risk management, just in case we do see a snap to the upside, because it should give us opportunity to short the market again if we head up towards that top side around 119 figure 15. The dollar yen took another step to the upside, but hit a wall of resistance around this 110.85 level. I believe the market should hold there in the short term, or in the interim, that is, until we start seeing a little bit more of a clearer pattern. But at the moment, the RSI has buckled and the MACD still holds to a negative signal. So therefore, could see a retreat from this level back to 110 and reassess from there. The sterling gave back near enough part of its gains from late last week, but the technical question is, have we fully broken down? But as you can see, we are under the RSI, but the MACD is holding to a weak positive signal. So therefore could see a small retracement into tonight up to about 138.65 with the strong cap above at 139.60.80. It's likely to be a little bit whipsawed because the market will be keeping a very close watch what Fed Powell has to say, and no doubt with the recent numbers coming through, that is the CPI, that the market will probably see how he will defend, or the central bank will explain. And other than that, we do have the PPI out as well. Therefore, the sterling yen leg has nearly posted an outside range day on this rally, or anyway negated the dragonfly doji. With a buckled RSI, does turn the picture back towards the support level of 152.65 down to 151.5 and reassess. Well, it would seem that the spot gold has continued to remain aimless. And that means that the top side is still struggling to sustain any gains. However, technically, we should still not rule out a test up towards that region around 118.30.35. And then we may see a rejection from there and also see a decline back towards the bottom side of The support level seen at 1,786. Be very careful, should I say, just due to the dollar index rising. Now, my target still for the index is at 93, figure 60, and therefore we're only just 20 points away from that first target, and therefore could put a bit of pressure back on gold as the dollar rises. Well, we haven't broken above $75 a barrel, and still at this stage there's a little bit of a decline in these indicators. So I still hold in the view that the top side may actually retreat from this area, especially seeing a drop in Chinese crude imports, which has raised some concern on demand. So therefore, let's see how it plays out. Along with OPEC, still not coming to the table on any negotiations. So these are a bit of a mixed picture fundamentally. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the rest of the day.